if they voted for the country's independence in a referendum later this year.
The pound isn't an asset to be divided up between two countries after a breakup as if it were a CD collection. If Scotland walks away from the UK, it walks away from the UK pound.
Britain's three main political parties have spoken out against a currency union, saying it would be damaging to Scotland's economic security. They also claim there's no legal reason for an independent Scotland to keep the pound.
Are they really saying that an independent Scotland could insist that taxpayers in a nation it had just voted to leave had to continue to back the currency of this new foreign country?
It's seen as a direct attack on the Scottish government, who has built its political campaign for independence on currency continuity. In the government's white paper published last November, it says it wants to keep both the pound sterling and the Bank of England, and that it would be in the interest of both countries. Forcing Scotland to use a different currency, it says, would cost firms in the rest of the UK up to £500 million in extra bureaucracy and transaction costs, especially since trade between Scotland and the rest of the UK is worth nearly £110 billion a year. The Chancellor's latest comment could spark yet another war of words between London and Edinburgh. If the currency union is denied by Westminster, the Scottish government has already warned it could refuse to pay its share of the UK's debt, expected to hit £1.6 trillion in 2016.
Next, we're looking at a deal that could redraw the media landscape in the United States. The American cable company Comcast has reached an agreement to buy rival Time Warner Cable. The deal would combine America's two biggest cable operators into one with more than 30 million subscribers. Comcast is paying a whopping $45.2 billion. That trumps a previous offer from a smaller rival that also wanted to buy Time Warner Cable. It's not a done deal just yet, though. Regulators, they will have to give the green light, and analysts warn of tough scrutiny ahead, since the combined company would account for nearly 3/4 of the US cable industry. To pave the way for approval, Comcast says that it will leave some markets, which would lower its customer base by 3 million. The companies also say that their businesses barely overlap geographically. Also, the two companies are referring to the growing popularity of alternative services to watch television online, like Netflix. Now, shares in Time Warner Cable, they're up almost 7% this hour on this news, but Comcast is losing some value, and that brings us to a wider look of the stock markets over in the United States. This hour, we're seeing gains pretty much across the board, with the Dow Jones Industrial Average up 0.4%. It follows strong earnings from firms like Goodyear, the tyre maker, and also TV channel CBS. It was a little bit more of a mixed picture in Europe at the close. The FTSE in London slipped somewhat, but the CAC and the DAX gained. Italy's main stock market index also fell back on the prospect of political turmoil. The FTSE MIB was down almost 0.2% at the close. This as Prime Minister Enrico Letta has announced that he will be stepping down. If we take a look at some other company news, shares in BNP Paribas lost ground after the French bank reported a drop in quarterly profits. The bottom line was hit as the lender set aside $1.1 billion to cover legal costs. The bank says an internal probe has uncovered evidence that it may have breached US sanctions. Other European banks have paid dearly for violating US sanctions on countries like Iran, Cuba and Burma. Shares in Rio Tinto slipped during Thursday's trading, even as the mining company went back into black last year. Rio says it made almost $3.7 billion during 2013. That follows a full-year loss of $3 billion back in 2012. Rio Tinto says it's proof that a cost-cutting drive that included thousands of layoffs is actually working. And looking at the Eurozone, the jobless rate in Greece has hit another record high. New figures show 28% of the workforce in Greece was out of work in November. That's an increase from the previous month's rate of 27.7%. Greece is suffering from the highest jobless rate in the Eurozone. Prime Minister Antonis Samaras says the economy is on the way towards a recovery. He's also unveiled a new council to promote and organise job creation. That is the business news, and it's back to you, Luke.
Marcus Carlson, thank you very much for that business update. You're watching France 24 live from Paris. Up now, web news.